Hello guys, welcome to the post-market analysis of Bank Nifty for October 17, 2023. So this is what the Bank Nifty has done today in 5 minutes chart. But before talking about the Bank Nifty price action for the day, let's see on a daily chart what Bank Nifty have to say. Okay, so this is the daily chart of Bank Nifty. As you can see from the last couple of days, Bank Nifty has continuously formed dojis or spinning tops. So we have one, two, three, four, five, six candles in the last couple of days, which are saying that the market is absolutely not doing anything. We can see that with these doji candles, and from the last few days, market is absolutely in the sideways zone. Okay, opening gap up sometimes, opening gap down sometimes, but there are really not very strong candles here. Okay, so as you can see before, okay, so earlier there was an uptrend, later this was downtrend, almost still here, but after that market has absolutely gone sideways in this area. Okay, so by this we can know that there is no a proper directional protection to the market until it breaks either this support area, what is here, or it has to break this area. In both the cases, breaking this area looks little easy because this is very close to the support area, but until it crosses and creates some pattern on a daily frame, we cannot say that market is in a directional moment. Also, the weekly analysis of the Bank Nifty is also showing that. See, okay, so this is the weekly chart where each candle represents 1 week. So even here, you see, so even here, the Bank Nifty has no proper direction from the last couple of weeks. It is partially in an upward trend here, but we cannot come to that conclusion until a weekly candle closes beyond this area at least. Okay, so in this weekly chart we can see that market has formed a double top. So there is one, this is bottom, so we kind of see a double top there. After, usually after a double top, market tends to break this support zone. Once it breaks, then you can expect a very big fall after this, but it is still intact, so the support zone is still acting on a weekly chart. Sometimes it can also become a triple top, we can't say, or a triple bottom. Right now we can't decide on that. So on a weekly chart, as we have seen, because of multiple doji candles here, the market is absolutely sideways from the last couple of days. So with this in mind, this last candle what you are seeing here is the bearish candle of today. Okay, but before that, all these candles are not giving any clear direction for the Bank Nifty. So let's go to the 5 minutes chart. So let's see what we can learn from today's analysis. Okay, we use a price action, okay, with a couple of indicators. So we majorly work on support and resistance area. So I'll tell you how to draw this. So as you can see, Bank Nifty has opened gap up. So the very first candle is a bearish candle, and second one is also a bearish candle. 3, 4, 5. Market has continuously formed a bearish candles until 9:35. Okay, and from here it has formed a kind of swing low, and it has gone uh, towards the upward direction, but yeah, towards the upward direction, but it couldn't cross this, and from again the market has come down. Okay, so starting from here the market has continuously come down. Okay, it has gone up but it failed, again it has come down, and here it has gone up, and again it has failed to go top. So it has formed a swing low here and a swing high there. Okay, so this is the swing low, and this is the swing high. So now what we'll do is we'll try to draw these two areas. Okay, because okay, so the first we'll take the first swing low. Okay, because the market failed to go further down from this point, I'm taking this zone and marking it as my support zone. And from this area, okay, from here to here, from here to here, market has also failed to go up. So from this zone, market has to fail to go further up. Instead, it has come down. Okay, so what we'll do is, so till this, let's assume that the market has done, has formed candles, okay, until this area. At this point, we can say that this is a swing high. So what I'll do is I will form a very good, I'll draw a rectangle there, which for me is a resistance area. I'll do one thing, I'll drag this to the left side, and here you see there is a candle high there. So I'll try to cover up this candle high. Okay, right now till this blue line, let's assume that the market is finished till this blue line. So till now we have, based on the market's price action, we are able to get a swing low and a swing high. So we have drawn a support area and a resistance area here. Okay, so let's turn that into red. So that is our resistance area, and the green one is our support area. So now what should be our plan of action further this point? From this point, market again has started to move in the upward direction. Okay, so at this point, let's assume that, okay, from this point, market has, let's assume that market has formed candles still here. At this point, what ideally we should do as a good technical analyst is to bring this area till this point, because these two candles have taken the support from these two candles real body area of this green candle to be accurate, and it has taken a support here, and it has started to move up. So what I have done is I've modified my support area based on the price action that it has created. So now what I'll do is either I should wait for the breakout, or I'll wait for the support or resistance. So I would like to see some price action happening by touching either, the market should come here, take some support, or it should go up and see some resistance here. So I could enter either in this area near to the support area or near to the resistance area. Now market has done nothing till 13:15, that is 1:15. Till this point market has done nothing but moving in between these two zones. It is at 1:20 p.m. market has come out of this zone, resistance zone. This is the very first candle that broke out, but the thing is that real breakout? Okay, now is this candle is this the real breakout, or it is a fake breakout? So how will we know that whether it is a clear breakout or a fake breakout? Very simple. One thing that you can do is you should wait for the second candle. So do not take decision only based on one single candle. So, or you should wait for the retracement. See here what has happened is this candle, this candle, okay, second candle after this candle has formed a bearish engulfing pattern. Okay, it has formed a bearish engulfing pattern. Now if you just adjust this to only this wix area, okay, and see, okay, this bearish engulfing pattern has closed below this resistance area. Okay, you got my point. This has crossed, this has tried to break the resistance area, but the immediate candle has failed to keep that keep that intact, okay, in order to move in the upward direction. Okay, so the second candle has formed a bearish candle, which indeed ended with a bearish engulfing pattern. So here is the bearish engulfing pattern, these two candles. Okay, so now based on this bearish engulfing pattern, we cannot simply take one candle formation and then enter into a trade. It is not the candle pattern that is important, but also the location of the candle pattern that is important. See here, the location of this bearish engulfing candle pattern is at our resistance area. So here we can go, short. That means here you can buy the put option. When where should be your first target? Your first target should be this. Your second target should be this, because here there was a kind of support, a kind of swing low. So we we can think that, market, if market comes down in this direction, this is the first hurdle that the market has to go through. So if that crosses, this is your second area, okay, where you can expect the market. If the market is very bearish, then you can even keep this line as your third target area. So in this case, you will enter, you would have entered here, you would have entered into your short position. Okay. Okay, remember one thing. Whenever you want to take a trade, you will take a trade only before the candle closing. You will get into the candle when the candle is about to finish its duration. So in this chart, this is, since this is 5 minutes candle, you will enter into this candle's closure. That means you will enter just before the candle is getting closed, that is in the last 5 seconds of this candle closure. So you would enter there, and you would keep your stop loss till this swing high. Okay, and you'll keep your profit till here. Okay, so since it has, so this is your, you can do one thing. Since the market is coming to our first target area, you can readjust your stop loss into the into your entry. That is, you can keep your stop loss to cost, and then wait for the price action to form in this. Okay, within no time it has touched the second target. In the same candle, it has gone to our last final target as well. So here we have reached 83 points in bank nifty, but it is not necessary for the price, it is not necessary for our PE to also move 83 points, right? So let's see how much of a price has moved based on this price action. Okay, now I'm deleting these target lines since we don't need them now. So we have removed that. Okay, so now the price is, bank nifty is at 44,500. So I would pick 44,500 P, and then see what the price was at 1325, 125. Okay, and my target was the second candle after that, just before the closing. Okay, it was this is the point where my target was hit. So what we'll do is we'll see 44,500 PE, which is already selected, and the time frame is 5 minutes. Now we have to see where is our 1325 candle. That is this, right? I'll cross check once again. Yes, it is 1325 candle. We have entered towards the closure. Okay, so this is the 1325 candle. I've asked you to enter, into the closing, so that is 133. And the very next candle, that is 1335 candle, we have exited just before the closing. So the closing was around 172. We'll take approximately, that since we have exited before that, I would take 165 to 163. So from 133 to 163, it is 33 points. So this move has given us 33 points in the put option. So this is, so let's make it round. So it is 30 rupees here. Okay. So I'll just revise. So why we would have taken an entry here is because of the bearish engulfing pattern. Okay, forming at the resistance area, and this breakout didn't see any follow through, and we have a very clear target towards this previous support area. Okay, since market has moved beautifully, and then it has hit our target within no time. And then let's see what has happened next. So the same very candle has broken down the support area. Can we take this, can we consider this as a valid breakout? Simple. All you have to do is wait for the retracement or the second candle. So the second candle is green here, but it has retraced into the support area. Okay, but failed to make another bearish candle. So we would have waited for the next candle, which has closed into the support area. But after this green candle, we uh, we should wait because the market has not closed above this to take any action or below this any action. So the very first candle that is closed below this area is this red candle. Okay, we would have taken entry here. The reason is this is the inverted hammer. Okay, I'll give you that. So this green candle right here is an inverted hammer. Okay, so this invert, according to the textbook rules, okay, when you see an inverted hammer after the downward movement, okay, market is supposed to stop there. And if you see any price getting closed above that, you can expect the market to go up. But in this case, since we have this support area, even though we have seen this green candle, okay, we don't want to go towards the call option because we know that we need a solid close beyond this and a proper follow through or a candle formation, a reversal candle pattern, in order to take a call option. So since this price failed to close above the support area and has closed below this hammer, okay, and below this line, okay, we can say that retracement into this area has successfully shown us the direction towards the downside. So what we can do is we can enter into this candle just before the candle is getting closed. That means you can enter before 5 seconds before this candle is getting closed. And what should be your target area? Simple, you can keep 1 is to 1 as your target area when you enter here. Okay, you can keep this as your stop loss just above that, and you can keep your profit to 1 is to 1 ratio, which is this. Yeah, here you can see risk reward ratio is 1. Okay, so now how long did the market take to reach our target? Again, not more than 3 candles. Within no time, 1 2 3 candles, market has reached our target. So let's see, this is what 1355. So let's assume that, see, either you can enter into 44,400 put option, okay, or you can enter your same, you can pick your same strike price where you have traded earlier. So the earlier strike, right now I'm taking the earlier strike price. Earlier strike price is 44,500 is what we have taken. So now the candle of entry is 1355 and the candle of exit is 1410. Okay, so here is 1355. We should have entered into the closing of this candle, which is 170. Okay, and the 1410 is our exit. So 1410 towards closing, right? Wait a minute. Yeah, all exactly till close. That is the 1410 candle. Okay, so 1410 candle. Exactly closing is where 240. So 240 minus 170. This is 1355. Yeah, 1355 is 170 and 1410 is 240. Okay. So that is 70 rupees. So you would have made 70 rupees in this trade if you would have taken proper entry here. So this is 70 rupees. Okay. So both put together, you are talking about 100 rupees of profit till now. Okay, so what has happened next to after this price action? Yes, we'll see that also. Market has given us another support area here. Reason is because it didn't cross this, the price couldn't cross this swing low. So I'll consider this as my next support area, and this as my next resistance area when the price is under it, because we all know that when support area breaks it acts as resistance, and when resistance area breaks it can act as support. So now the price has gone up. Okay, here we have a solid hammer. Okay, if you notice 1420 candle, this is a proper solid hammer, but we cannot take a put option, or we cannot assume or predict the market that it can go down, because this is hammer. That's okay, correct, but where is your second confirmation for this candle? Okay, see, it's not the candle formation that is important. Candle formation is only a part of prediction. It is the tentative indication that the prices may change from here, but in order to confirm that, you that particular candle pattern should happen at a important location. So for us this is not very important location, because this is our important location. Okay, you can see that a nearly engulfing as pattern has happened here. Okay, at the resistance. So, or this can also be considered as a pure dark cloud cover if it is not a proper engulfing. So down the line going forward, we'd also uh, talk about all these patterns in our further videos if you're interested. So here we cannot take the trade because it's already 310. So this candle is 1510. Even though this is a beautiful formation, okay, but there is no time for the market to reach the till this point. Okay, our initial target would have been this particular line, but even the market is touch here, there is no proper risk reward ratio. You would have your okay, you would have entered here considering this is your first target. Okay, and this is your stop loss. See, first of all, in both the cases, whether it is this or whether it is this, your risk to reward ratio is only 70 here, not even 1 is to 1. And moreover, there is no time left for the market to make such huge moves, because this is your 310 candle. Okay, so now we have seen, uh, we would have made 70 rupees profit with the proper support and resistance zones that we have made, and with little bit knowledge about candlestick patterns. So today it gave you 100 rupees profit, that is approximately, not approximately, exactly 1500 rupees per lot profit you would have made today. Okay, so that's it for today. let's meet for tomorrow's let's meet in tomorrow's video, where we'll see the market action. Will This channel is mainly dedicated for the post market analysis, because I believe the truly this is the true way to learn the markets. Okay, you cannot ignore what has happened in the past. So this is how on we'll target to learn through our post market analysis, and down the line going forward we'll also talk about more candlestick patterns in this channel. Okay, thanks for watching, and please consider subscribing if you want to see a valuable content in the future. Thank you.